Trading doesn't have to be difficult or time consuming. In fact, you can make a great return from trading set and forget strategies from little as 10 minutes a day. That's the way of the lazy trader. See for yourself now in this example of how easy and effortless trading can be. That's lazy trading.
So we've just closed out of our short position on CAD Swiss. We've just made over 4% on this move downwards, and we just want to show you how we did it based on our price action strategies. Okay, so taking a closer look here at this cross currency pair, we can see that we're in an overall long-term downward trend. We've been making lower highs and lower lows, looking at the cyclicity here over the course of the past 6 years. So a very long time, protracted long-term move, and if we look at the medium term downward trend, we can see here that we're in an extension leg, and we're just taking advantage here on the weekly chart of a pullback after 2 consecutive buyer bars or 2 buyer weeks in a row. We've had a bearish pin bar reversal, which has given us an excellent opportunity to go short in this sell zone here. Not only do we have a bearish pin bar reversal that's not strong enough on its own, we also have the fact that it's rejecting this horizontal level here around about 9031. So we've got an old support level turning resistance after the breakout here, which we've seen this break of support further in the back, well, further back in March 2013 this year, but that's not it. We've got more reasons to go short on this one. So bearish pin bar reversal, rejecting a horizontal level. What else looks so great about this cross currency pair at the moment? Well, we take our Fibonacci retracement toolbar from the start of the move here, take it all the way down. We can see that we've got a 0.382 Fibonacci retracement, which is a shallow retracement, but that's very good if we've got strong speed and momentum in the downward move, and we've got lower highs and lower lows here. It seems very decisively down. What else do we have though? Let's take a reading from this swing high here. See, we've got a Fibonacci cluster. We do. We've got a Fibonacci cluster, which is an overlap of 2 Fibonacci retracement levels of the 0.618 Fibonacci retracement from this swing high with the aforementioned 0.382 Fibonacci retracement. I know it looks a little bit messy, but these are all factors which add to the overall decision to go short on this cross-currency pair. Just taking a very quick look at the hourly here, we had this triple top here on the hourly formation, so we could see that even exasperatingly enough on the daily, it didn't really give us any firm direction or any conviction that it was going to go down. But if we looked at the fact that we had the bearish pen bar reversal on the weekly, coupled with the fact that we had this triple top formation on the hourly, gave us that confirmation that the shorter term bars and sellers were kind of stilted in favor of the bearish move down, with the bears in control of this one, with the lower highs formed here intermittently. Of course, on the daily, let's take a look at the daily. It didn't really look too clear, even though we saw that it was likely to go down based on previous cyclicity. Our entry point here on the bearish pin bar reversal on the daily all the way back on the 6th, it didn't come to fruition. We were just moving sideways over a period of 5 or 6 days, so we exited the trade early. Rather exasperating. But however, on the weekly, as we just mentioned, we had that bearish pin bar reversal, so as we didn't have our entry on the daily time frame, we were able to take it on the weekly. So we just placed an order to go short just below the low of this bearish pin bar reversal, with our stop loss above the high, plus spread, plus an extra pip, and we targeted just in advance the previous swing low here for that classic high probability lower reward outcome. Of course, we could have always gone for more. We could have gone for a slightly lower probability higher reward outcome, but quite frankly we'd rather have probability on our side. Bearing in mind it was risking 2%, we were in pursuit of an easy 4% ride here without the inevitable retracements along the way. So we placed this order on the 15th of September, we triggered in the next day, and we had a decent sell week thereafter, and then week 2 of the trade we hit target. We're now out of the trade, and we've now made just over 4% profit on our accounts, and so too have our clients who've taken this trade with us. So in terms of actually managing this trade along the way, no effort was spared managing it. We didn't have to do anything. We just simply set our orders up and walked away. This took about 5 minutes of our time.
What do you think of that? Trading does not have to be difficult or time consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading and your trade secret video pack so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.